Let's just cut across to the Tata Steel conference call that's currently underway.
In the bit, but again, it started going up because international scrap prices have gone up, DRI prices have gone up, iron ore prices have been very strong. So what we are seeing now is certainly the domestic markets restocking, certainly. We are also seeing improved auto sales having a cascading effect on multiple sectors, particularly the MSMEs. So not only is it restocking, but we are seeing that people who were postponing purchases thinking that prices will drop are now preponing purchases or purchasing what they need. And as a consequence, the hot rolled coil prices have gone up by at least 2,000, 2,500 rupees since June. And we expect some more price increases in the rest of the quarter. Long products was a bit slower off the bottom in some sense. But I must also say that the current price levels are still below what it was pre-COVID, because the prices have dropped, it's gone back, but we are not yet at pre-COVID levels.
Okay. And so it's fair to assume that the inventory levels in the channel, including the steel producers and customers, now that they are at a very reasonable pace. So if there is any uptick in demand, that could lead to a strong restocking cycle if that were to happen in the second half of the year.
I think what is happening now is, firstly, it's very unusual for steel prices to go up in the monsoon months. Okay?
Right.
So it reflects the demand-supply balance. Second thing is, I think the demand in the export markets are still quite strong. Okay? So today, the domestic producers have a choice between exporting at decent prices or selling in the domestic market. So at this point in time, there's no pressure on inventory anywhere because in India, at least all the primary producers are pretty much coming as close to full production capacities as possible and have the options of selling in the domestic market or exporting. Okay, so we don't have the pressure that we normally see in monsoon months, and which is a good thing, the way we see it, because normally October onwards, things anyway start picking up. If you see last year's price increases started happening from November, right? It was actually going the other way between June and October last year. And it started going up in November until the pandemic tripped it in March. So normally second half of the year, more specifically January to June is the best 6 months for steel prices. And typically after the monsoons, there is a build-up which starts happening till January, and then, normally it does well. So the good thing is after a long time, I'm seeing monsoon months and prices are going up, which is positive for the industry.
Understood. Very clear. So very good. Second question is on Europe. Is there a one-off related to carbon credit sales in this quarter, and if you can quantify that?
Yeah. So there has been a one-off sale in the last quarter. I think it's about 60 million, Kaushik?
The total amount of sale is about 132 million pounds. And there is a gain which is about 78 million, of which 56 million is in the UK, and the rest of it is in Netherlands. So that's the impact. So the sale amount, which is the cash flow amount, is about 138.2, and the gain amount is about 78 in the piece.
So Mr. Chatterjee, just to clarify, 132 million GBP.
Pounds, yes.
Yeah. So this is what has been incorporated in the EBITDA for this quarter?
No. Saying that 132 is for cash flow purposes. For the EBITDA purposes, you take 78 million pounds.
Okay, understood. And lastly, sir, on the outlook in Europe, given the, you already mentioned 150 euros per ton, these are close to, multi-year low kind of spreads. So it's anybody's call how long the spreads will take to improve. So meanwhile, is there a prospect of additional regulatory support in terms of, there have been news flow on interest-free loans or some investment by the government in the company? Is there anything, any color you can share? What kind of hand-holding the government can provide us in this challenging period?
So one thing is from the market side, the EU is set in some quotas now. So there is a product-specific, country-specific quota, okay? So which is, kind of acting as a cap on imports. Imports is about 20%, which is, if you look at the long-term average, 20% of domestic demand being met through imports is quite high. But there have been a few players who've been quite aggressive and strong, particularly Turkey. So the product-specific, country-specific quotas will help limit the share that any single country or source can enjoy, and that we believe will bring more discipline into the market. And we are already seeing the impact of that in terms of the sentiments changing. And I think in Europe as well, the prices have started creeping up over the last few weeks, not as quickly as it has happened in Asia. It's also partly because Europe, still the capacities are underutilized, so there is headroom for people to increase production if they want. But still, sentiments have changed. Again, this is traditionally a weak season in Europe because it's holiday season. But still, we are seeing prices going up, and we expect that after the holidays, when the factories, the consuming factories, pick up steam, we will...
Okay, well, some positive commentary coming in from Tata Steel. He said that the current prices are still below what they are witnessing pre-COVID levels. However, the fact that even during the monsoon season, prices are continuing their upward trend is a positive sign. Inventory levels as well are gradually decreasing. Domestic markets seem to be restocking currently as well. So some interesting commentary coming in from Tata Steel.